Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market update. Hope everybody is doing well. And in today's markets, guys, a landslide of green after Jerome Powell came out in the afternoon and reassured everybody that the inflation situation was still under full control by the Fed. So in today's video, guys, we are going to go over exactly what happened in that meeting or in the afternoon, see what Jerome Powell said, and how it stands to impact the next 3 to 6 months of trading. We're also going to be going over our technical analysis in terms of major indexes and big tech names. And lastly, take a glimpse into my portfolio for the trades that I took after the Fed decision at 2:30 p.m. So we're not going to be covering earnings here, guys, today. We did have a couple noteworthy earnings that came out after the close. Micron, Chewy, just to name a few. Tomorrow we do have Nike, Lululemon, and FedEx. So what I'm going to do here, guys, is we're most likely going to do Micron and Chewy on the Friday. Today, I really want to put a special emphasis on the Fed meeting because it really is a large factor that will impact our trading strategy and style for the foreseeable future. And I also want to put a specific focus on the trades that I made. So those two elements are going to take pretty much the time that we usually spend on earnings. So I would rather do that because it is the most important thing that happened today. So for the earnings, guys, we're going to cover pretty much Micron and Chewy on Friday. Tomorrow, we'll be doing the full rundown of Nike and Lululemon. So with all that being said, guys, let's get right into today's video. So SPY up a healthy 0.92%, QQQ up 1.19%, but it was not always that way. Take a look at your morning trading here, guys. Morning trading was really flat. Everybody really waiting on the sidelines for that Fed confirmation, either or direction. Was the Fed going to be bullish? Was the Fed going to be bearish? In light of the January and February hotter than expected inflation reports. And now that we have our confirmation, guys, the market really loved what they heard. Take a look at the heat map. Right, so most of your move was made after the Federal Reserve statements. And after that really led to the landslide of green that you're currently seeing on the screen right now. Everything pretty much up except for a few healthcare names on the pullback. But for the most part, guys, your outperformance comes once again from technology. Semiconductors having a very nice recovery day. They were actually, for the most part, flat or slightly red on the morning, coming back very nicely in the afternoon. Just a beautiful broad market day of momentum to the upside. On the one-day relative performance, you can see that even better. Everything in the green, only healthcare trailing ever so slightly behind, but that's fine. Healthcare has had a tremendous rally year to date. And I do expect that to continue. So today, just a little bit of a healthy pullback for your healthcare sector. So with that out of the way, guys, let's get right into what happened in today's meeting. Now, as a quick reminder, guys, I just want to remind you, what were we looking at leading into today's meeting here, guys? So I did a couple notes here on screen, and we'll go through a few more as well. So we were coming into this meeting, guys, willing to pay a risk premium for data. If you remember my videos over the past couple of weeks, we were hinting at the fact that the January and February inflation reports came in hotter than expected. What we did not know is, does the Fed care about whether or not the data came in hotter than expected, or do they not? And if they do care, how does it affect the rest of the year in terms of your rate cut forecasts? Obviously, if the Federal Reserve would have put a big emphasis on the hotter than expected inflation data that came in January and February, well, you could have potentially expected some the rate cuts to come in later than expected and less frequent. Prior to the meeting, we were pricing in about 3 rate cuts, most notably starting in June. So we were worried whether or not that was going to get pushed back to maybe July or August and cutting the rate cut frequency from 3 to 2. So these bits of data was what we were expecting here, guys. And we know that the Fed has been maintaining the stance of they are data dependent. So when I saw the data come out hotter than expected in January and February, I was expecting them to act accordingly and adopt a slightly more bearish stance over the course of the day today. However, that did not happen. We obviously didn't know what the Fed's stance on these hotter than expected inflation reports was going to be. So that's why I say I was willing to pay a risk premium before getting the data, which is why I sold most of my positions prior to this week and opened a slight short position on the NASDAQ, just so I could hedge a little bit, guys, because we didn't have the full data. Now that we have the full data, we can readjust our positions accordingly. So here are some of the few highlights from today's meeting with Jerome Powell. So one of his quotes that came out during the meeting, guys, is the following, and this is pretty much what we've been saying on the channel now at this point for the past 3 or 4 months. Even though that I was short-term bearish leading into this meeting right here, I was always saying that it was just potentially for some short-term pullback, but in the overall context of a very strong bull market. And Jerome Powell mentioned the exact same things that we've been talking about on the channel. So he said, the economy is strong, right? GDP, the labor market is strong, and inflation has come way down. These are all the things that we constantly have been talking about on the channel here, guys, which is pretty much the reason for your last 4 months worth of rally, right? Strong GDP numbers, decent jobs numbers, and inflation, even though came in slightly harder than expected in January and February, still in the context of overall downtrends, right? So very, very healthy indeed. A few of the notable bullet points here. Number one, the thing that I noticed about Jerome Powell today is that he was extremely confident in his language about inflation. Whenever they would ask him, what is the target for inflation? He would really answer hardcore in terms of saying it will come down to 2%. Not we are mostly confident that it will come down to 2%. No, he was saying it will come down to 2% as if it was a 100% certainty. So that was something that we have not heard from Jerome Powell before. Now, number two, January and February were non-factors from the Fed, and we will get in shortly, guys, to the highlights. This is just a few of the bullet points that I noted prior. So today, I should have probably introduced this by the fact that no interest rate change on the day today. And number two, they didn't change the dot plot at all. We're still expected for 3 rate cuts over the course of the year, and most likely those cuts are going to start in June. So that did not change either. Now, a few of the things that I noticed, January and February, Jerome Powell said that they are pretty much non-factors, that overall inflation was still in a notable downtrend over the last 6 to 9 months. He did also say that it was going to be a bumpy road back down to 2%. We've been talking about it on the channel as well, how it's slightly sticky here around the 3% mark. So he said it's going to be a bumpy road down to 2%, but once again, reiterating that it will come down to 2%. Number 4, inflation usually ramps in the first half of the year. So he's kind of bringing a justification as to why January and February were a little bit hotter than expected, especially in services, which we did cover on the channel here, guys. A lot of your service companies, such as auto insurance and other service providers, usually tend to increase their prices at the beginning of the year. And that was no different this year. So he was saying as well that inflation usually ramps in the first half of the year and will taper back towards the second half of the year, which he's expecting for this year as well. Number 5, housing services will come down. A large reason for the increases, or not the increases, but a large reason that inflation is sticky around the 3% mark here, guys, is because of your shelter costs. Take a look at this purple line right here, right? Shelter is one of your components that just hasn't come down as much as the rest of the other components have come down. Now, he did address this, guys, and he did say that housing services will come down, which is a very notable thing, guys. Take a look. He was referencing the owner's equivalent rent having come down. Take a look here. Here's a report that we have from Zumper here, which specialize in real estate pretty much. Here is your shelter costs. With record apartment supply hitting the US market, renters have more options to choose from, so property owners are even more incentivized to retain tenants since units may sit empty for longer in current conditions. So build up in rental supply. If a renter wants to avoid the hassle of moving or wants to wait out the uncertainty of the current economy, staying in place will likely mean a minimal rent increase this year, if any. Take a look at your national rent growth 2023, early part of February, all the way through now. Does this look like rents are on the increase or to the decrease, right? So they are decreasing, guys, right? Decreasing, just not as fast as the rest of your inflation components, but they are on a significant downtrend here. Here's your Austin and Dallas rent growth versus the national average. Those are 2 very large markets as well. Let's take a look at your Zillow chart as well. These charts are all 12 months worth of data of rents. Take a look at your top rental markets here. Phoenix, for the most part. Take a look where they were a year ago and now. Most of all of your major markets here, right? Phoenix, Los Angeles, Dallas, Florida, Orlando, Miami, San Diego, Chicago, Houston, slightly flat, Chicago, also slightly on the uptick as well. So you have a few outliers here, but for the most part in your major markets, rents have come down. So that will continue, guys. And Jerome Powell put an emphasis. The second half of the year is when you should see shelter inflation have its most notable decline here. And number 6, the dot plot remains unchanged, still 3 cuts this year, and still mostly coming into the month of June or July at the very latest. He was very adamant, though, on the fact that he will be doing rate cuts over the course of this year. So now that we've gotten all that out of the way, guys, let's cover a few of the headlines directly here. So Fed raises GDP and inflation outlook while keeping rate cut forecast the same. So Federal Reserve members still see 3 interest rate cuts in 2024, despite an improving outlook for economic growth. The Federal Open Market Committee's March projections for rate cuts, or the so-called dot plot, shows a median federal funds rate of 4.6% in 2024, meaning that that's what they expect the interest rate to be at the end of the year, pretty much. That would still be synonymous with 3 cuts, not coming down to 2 because of hotter than expected January or February inflation. They just really maintain that at 3 cuts. Now, the previous summary of economic projections, this dot plot right here from December, also showed 3 rate cuts in 2024. No change there. However, the projected change in real GDP for 2024 was 2.1 in the March projection, up from 1.4 in December. Core PCE projections also ticked up to 2.6 from 2.4. So they are now saying that the economy is going to grow at a faster rate than they expected. And they also are noting that inflation may stay a little bit stickier for a bit longer, increasing their inflation forecast on PCE to 2.6 from 2.4%. So still, inflation still projected to be above the 2% target, but he was very confident that it is still in the overall context of a downtrend. Now, the FOMC's SEP, the dot plot, continues to show 0.75% of rate cuts this year. That's 3 times 0.25, even as the core PCE estimate was increased to 2.6%. So we'll argue this is the most relevant takeaway from the SEP because it suggests the upside seen in realized inflation early this year, January and February, is being dismissed by monetary policymakers, Jerome Powell. Federal Chair Jerome Powell said in his news conference Wednesday that the central bank wasn't completely dismissing the recent inflation reports, January and February, though he did say that the January data may have been distorted by seasonal factors. Here's what Jerome Powell said. I take the 2 of them together, January and February inflation reports, and I think they haven't really changed the overall story, which is that inflation is moving down gradually on a sometimes bumpy road towards 2%. Additionally, the median projection for the Fed funds rate in 2025 rose to 3.9 from 3.6, implying 1 less rate cut. So this was the one meaningful change, guys, in the dot plot, is that rates would be higher for longer into 2025. Obviously, the Fed is going to remain, however, data dependent. So we'll tackle that one when we get to it here, guys, right? So these are the things that we were dealing with today, and it really gave us the confidence that, as we've been saying on the channel, when I covered the January and February inflation reports, I said that they were higher than expected, but I also said that I wasn't nervous, guys, because inflation was on an overall downtrend. Now, if Jerome Powell really wanted to smash us today, he really could have by putting emphasis on January and February inflation data, saying it came in hotter than expected, the job's not done. Therefore, we're tapering back our expectations for rate cuts in June, maybe pushing that back to the second half of the year, maybe in the fall, and we may be only doing fewer rate cuts as shown by the dot plot, right? But that did not happen here, guys. So Jerome Powell had the opportunity to push back, but they chose not to. They really chose to stick with the narrative that inflation was still on a very clear downtrend. And that's why your markets rallied pretty much as hard as they did today. He just really basically gave the green light for the bull market to continue at this point, guys. He really set the expectations for the rest of the year. And what does the market like more than anything? They love certainty and they love confidence. Before this meeting, there was a lot of uncertainty as to how the Fed was going to react to January and February being hotter than expected and inflation being relatively sticky around the 3% mark. Well, now we have our answers and now we can adapt to the new data. And I still maintain, guys, the same narrative that we've been having on the channel, right? We've never said that we were in an overall risk of losing our overall uptrends, right? Our weekly bulls never lost control on the SPY. Our monthly bulls never lost control. All we were looking out for was a short-term loss of daily control, which may have sent us into healthy weekly consolidation. Now, this is not going to be the factor at this point that sends us into that weekly consolidation. So your next question should be, well then, Will, what could be a risk to this market that could potentially send us down for maybe a month or even 2 months at a time, similar to this sell-off that we had last September and October. Well, it's important to remember the context of this prior sell-off here, guys. This was pretty much the first time that you had a major uptick in inflation. We talked about it when it happened, when we went back there at this time, right? This was your little uptick in inflation right here. August and September, because they were measuring prior hot months during the summer where people usually spend more money. And that is the first time that Jerome Powell really started saying back here, he did it for 2 meetings in a row. He said, higher for longer, and we're firm on it. Higher for longer, don't expect rate cuts anytime soon, and we're very firm on this stance. And the markets really didn't like it here, guys. Couple that with the fact that inflation was going up, and that's exactly the sell-off that you got. If he wanted to trigger a similar type of sell-off as the one back here, he could have used the January and February inflation reports and adopted the same stance as he did back here in saying, we're not happy with the most recent inflation reports, and it shows to us that the job is not yet done. Therefore, we need to keep rates even higher for even longer, which means that we're maybe taking a rate cut off the table for this year and potentially delaying the first interest rate cut. And those would have pretty much hurt the market. It would have hurt market expectations and probably would have been a decent catalyst for a little bit of a sell-off. We didn't get that. What we got today is Jerome Powell just reiterating the green light for pretty much this bull market, which on the channel, we've also shared that opinion, guys. You know, we were predicting for potentially a minor sell-off, but in the overall context of a very healthy bull market. And that is exactly the situation that we are currently going to adopt on the channel as well, being data dependent, just like the Fed. We are going to reiterate the exact same thing that Jerome Powell said today, and that we've been saying on the channel for pretty much the past 3-4 months at this point. The fact that the economy remains strong, the labor market remains strong, and inflation, as a matter of fact, has indeed come way down. And the one remaining factor, shelter, will also be coming way down over the course of this year, guys. So hopefully that was insightful into understanding what exactly happened at the Federal Reserve, what we were nervous about leading into today's meeting as well. And basically, guys, we paid a risk premium for data that we did not have yet. We tried to cover ourselves to rather be safe than sorry, right? We were expecting, and the data did point to that, guys. We could have indeed gotten a fairly negative event. But now that we know Jerome Powell's stance on that, it just leads us to believe that even in the next few months, guys, if we get slightly hotter than expected, but still trending to the downside, right? Jerome Powell, unfortunately, or fortunately rather, won't care because he understands that most of the elements of inflation have indeed come enough down to warrant, you know, the fact that the markets are relatively healthy right now. So it was a very, very good day. I'm very, very happy with this result. Wouldn't have been opposed to it to be negative. That would have just delayed the bull market maybe by a few weeks up to a month. But the end result at the end of the day, guys, would have been the same. Now, what does this do for stocks? Well, we do have higher for longer rates in terms of 2024 and 2025. As you saw, the rate, the end of year rate projections, right, is going to be 3.9 down here as opposed to 3.6. So what does that hurt, guys? Well, it hurts once again your sectors that are very responsive or sensitive rather to interest rate changes. And you can think of the same ones that we've been talking about for the past couple of months here, guys, right? EV stocks, basically, because, the financing required to obtain the vehicles by the consumers. So those will be negatively affected by interest rates still. Solar plays as well, which are heavily dependent on, on interest rates as well. So those will be affected. And companies that run a lot of debt and that are potentially not yet profitable. Those three sectors, guys, are still somewhat borderline uninvestable right now if you want to have any short-term gains. Obviously, if you're looking for the more long-term, then right now the bottoming out of those different sectors, right, could represent a decent little buying opportunity for a long-term portfolio. But don't expect any quick recoveries in those sectors, in my opinion, guys. They are still sensitive to interest rates. And today just reiterated the fact that the dot plot remains unchanged. Still 3 cuts for 2024. And the interest rate at the end of even 2025, guys, is going to be almost 4%. That's not 2%. It's not 1% like it was in 2020 and 2021. So still, EVs, solar, and companies with a lot of debt will unfortunately continue to struggle in this high rate environment. What will do well? Well, what will do well, guys, is the same things that have been doing well for the past 6 to 9 months. Companies with a ton of cash on the balance sheet and your current narrative right now, which is AI growth to boost corporate productivity, right? These semiconductor companies have no debt. They have a lot of business pouring into them right now. They have decent cash reserves as well. And who are they being funded by? The rest of your big tech companies who also have massive amounts of cash on hand. That's why, higher rates are not going to affect these companies. So this still remains, for the foreseeable future, the best trade in the market right now. So hopefully, guys, all of that was helpful for you. And hopefully you're able to navigate through today's trading relatively well as well. So let's take a look now at our technical analysis on our major indexes, and then we'll do big tech names. And then, of course, we'll take a look at my trades because we obviously made a few trades. As I was saying, guys, I was waiting for the data to come out, and then I was going to position accordingly. That's exactly what we waited for. So SPY on the day point up 0.92%, still in the context of this beautiful uptrend. We were worried that SPY had potentially lost the daily uptrend, and we were looking out for today if they were going to just perpetuate this daily downtrend into the bottom end of the trend line. That did not happen. You had a very nice bullish engulfing move. So now with this bullish engulfing move, the bulls are now back in short-term control. We'll just be looking for a daily higher low to be set eventually when this move tops out. And then we'll be looking for the continuation of the daily uptrend in the context of this beautiful, week and monthly long uptrend as well. The weekly is also looking equally as gorgeous right now. Beautiful weekly uptrend. The bulls remain in full control. And on a monthly, the bulls still retain their full control as well. So at this point, upside resistance targets, guys, has to be the upper end of the trend line right now, which sits pretty much depending on how quickly they get there, right? It'll sit anywhere between 528 and roughly 530 in terms of SPY resistance. SPY looking very good. Bulls in full control, back in control of our short-term 12 EMA as well. Now moving on to QQQ. QQQ, the things that we were looking out for, the things that made us a little bit cautious leading into today's meeting was the fact that we were struggling to maintain this trend line right here. We were below our short-term moving averages. The yellow line's the 12, the orange line is the 26, and we were as well in a daily downtrend on QQQ. So a flush of this level would have most likely triggered a larger form weekly consolidation move, which would have brought us below this trend line. We were also wary of the momentum, the MACD about to cross on the weekly basis. So far, that still has not happened. Bulls regaining a little bit of that here today, guys. So could just end up like something like this right here, where we start really coming down in terms of momentum, and the bulls are able to recapture. That is what we're gonna have right here. So we were looking out for the cross, but until the cross actually happens, it is not a confirmed bearish signal yet. It was just a few of the items we were looking out for. Obviously, after today's trading, guys, that pretty much all that narrative right there that we were looking out for pretty much comes undone. At this point, your bulls are looking to regain control. We're almost there, guys. A break of pretty much 444 at this point. We'll just re-engulf your most recent seller's leg. At this point, guys, we're going to be looking for an engulfing move, set the higher low, regain the daily uptrend, right? Because we lost the daily uptrend. We were in a daily downtrend right here. So now bulls have step number one. We've engulfed the full leg of selling. And now we're going to be looking to set the daily higher low and reset the daily uptrend here, guys. Your below support targets at this point on a horizontal basis will be your lows, roughly around $434. We're now back above your trend lines, and we're now, we're now back above our moving averages as well, 12 and 26, and we're now back healthily above this trend line. So far, the dangers have been avoided in QQQ as a whole. And after today's data, guys, a lot of our big tech names that were struggling to break out from their all-time highs, guys, you remember me pulling up this chart right here, right? What were we looking out for? Last week, I published this list right here, right? In terms of what we were worried and nervous about leading into today's meeting, right? No more earnings, bad inflation data for 2 months, no seasonality, usually February and March are negative months, potentially Powell pushing cuts out further and fewer cuts, right? All assets are greedy. All major sectors low of the day last Thursday. S&P and XLF rising wedges. Those have since been crushed by the bulls today, by the way. Big tech earnings winner, lack of follow through. This was one that I was pointing out here, guys, on stocks like Amazon, Microsoft, Meta, Netflix, if you remember that, right? So a few of those elements today here, guys, have now all been taken care of by this most recent bull move. So it's very nice to see bulls back in the driver's seat here on the QQQ. So at this point, your upside resistance targets, guys, if we are to regain this daily uptrend, which I'm fairly confident that we will, now that we do have certainty in the markets, well, your upside targets, guys, 460 for the QQQs. Now moving on to XLF financials. XLF financials, look at this. Rising wedge, traditionally a bearish pattern for markets. Well, the bulls broke it to the upside at this point, going against, and as I was pointing this out here, guys, in yesterday's video and the video that I posted on Monday, a rising wedge is a high probability trade, but still it is even at best a 65-70% probability trade, aka it does not follow through every single time. Now, we also had a confluence with the area of resistance, which would have increased the probability for a bearish trade. Right? Overhead all-time high resistance, this red box right here, plus the rising wedge. If we would have gotten negative data on the day today, this probably would have flushed through and nobody would have thought the difference of it, right? But as you can see, the bulls always have a chance. Why? Because we're in the context of an overall monthly uptrend, very, very bullish market, very bullish weekly uptrend as well. So the bulls had the wind in their back, and any bullish news would have probably just broken this to the upside. That's exactly what happened, guys, which is why I didn't really take XLF on a short, just due to these pattern signals as a whole, right? It's always when you're trading, it's always if and then statements, right? You can never say, I am 100% positive that it's going to do this. Is if we break the trend line to the downside, break this into a daily downtrend, then your weekly confirmation to the downside will most likely be the case, and it becomes a high probability trade. But you have to wait for confirmation. You can't just take a trade in the middle of this rising wedge here and say, it's a rising wedge, plus resistance, it'll probably break bearish. You need the confirmation. If we get a daily downtrend breaking the rising wedge, then most likely the confirmation will be weekly consolidation, and that gives you a higher probability trade, right? We're trying our best not to guess, guys. We always on the channel, you guys know me, I always wait for confirmation of who is in control. It's very important. You guys notice that I don't use very many indicators on the channel whatsoever. The most important thing to look for in markets as a whole, in my 10 years of prior trading experience, guys, is who is in control. Who is in control of the monthly time frame? Who's in control of the weekly? Who's in control of the daily? Those are your higher time frames. Those are the ones that matter. And when you have one party like the bulls that are in control of every single other time frame, right? Well, they get the benefit of the doubt every single time. That's why any short positions are counter trend positions. You have to be very, very careful with them as a whole. So XLF doing a very good job. That was a very lengthy explanation just to tell you guys that pattern trading is not an exact science. Sometimes the patterns line up. Sometimes you even get confluence, guys. But at that point, it was still a counter trend trade. We had a big macro event come out today in terms of the Fed, right? So in terms of all that, guys, XLF bulls back in full control here. Daily uptrend simply continues at this point. Weekly uptrend simply continues at this point. And we are almost at your all-time highs, very close. 41.71 to be exact here, guys. We're barely 15 cents off that price right now. So if we crack through this area right here, eventually probably we are going to see a little bit of a breakout retest trade. That will be breakout of the range, retest the range as support, and then rally onto further highs for 2024. So very nice day on financials. Now let's move on to healthcare. Healthcare not with that great of a day here today, 0.23% to the downside, but you can see, guys, healthcare really opened negative here today. Here's your pretty much opening on the morning today, right? You can see that we were negative for a great part of the day. And then after Powell spoke, we were able to recapture that, but unfortunately still ending negative after yesterday's close, which is way up here, right? Just down a little bit on the day. But overall, healthcare looking fairly good. We still have not lost these lows here, guys. 144.60. Look how well the bulls have defended this area, even in spite of losing your short-term moving averages, right? We were looking, are the bears going to get a daily downtrend, significantly lose these moving averages, significantly lose these lows? If that would have been the case, then most likely weekly consolidation was going to continue, most likely into breakout retest territory, right? So here's your previous all-time highs. We're looking for the breakout of the all-time highs, a retest of this yellow line, similar to maybe what financials is about to do, right? So that's what we were looking out for. So far, the bulls remain in control right now, not losing these lows. So we will keep an eye out on the next few days here, guys. Need a break of 147.60 really, or in a V shape to reconfirm bull control, or at least a two-step event where we pull back a decent percentage of this move, set the daily higher low, and run. As of now, though, guys, no red flags at all. Still keep an eye on these lows, 144.70. Lose this, and you will get daily downtrend, and you will get further weekly consolidation. But as of now, that has not happened. Healthcare still looking relatively good. No red flags for me. Now moving on to IWM Russell. IWM Russell reacting beautifully from this zone here, guys. So the Russell was really muted on the course of the day. Look at the day here today. So flat leading into Powell, right? Traders really not wanting to take positions on growth stocks, which are heavily sensitive to interest rate changes. But then after the meeting, guys, up about 2% on the day. A beautiful retest. We were looking exactly for this here, guys. Context. Weekly uptrend rate. I'm sorry, I don't know why I put it so far on the left here, guys. I'll keep it center for you. My apologies. So in the context of a weekly uptrend, we were looking for, past couple of days, right, we had daily downtrend. We were looking for daily downtrend into weekly higher lows using this previous red box, which was resistance, which is now going to be support. Bulls are in full control, looking for a retest of this area. Anything above 188 was just going to be a weekly higher low for further continuation. You can see never losing the 12 EMA, guys. Haven't lost this 12 EMA since the rally started in November on the weekly, at least. So now looking very good, guys, for further follow through by the bulls. At this point, we are well underway to recapturing this second leg of selling right here. So now what we want to see is higher low, higher high, new daily uptrend confirmed. Or if the bulls really have some momentum after today, they can literally V-shape this. And if we break this high right here, guys, well, your weekly uptrend at that point simply continues onto another leg. And that is when we're going to get our Russell breakout here, guys. Next target for the Russell, about 217. And then it's the higher end of this range right here, 231. Looking very good. I will be shopping for potential positions here in the next few days now that the data has been confirmed and Jerome Powell has essentially green-lighted the continuation of the bull market. Now, moving on to the Dow Jones here, guys. Dow Jones breaking out healthily, 1% to the upside. And that's exactly what we're looking for here, guys. So, right, we were coming in tight to this meeting. We were worried. Number one, are we going to set a daily downtrend, which will be the loss of these lows right here, 38,500 roughly? We were looking for these lows to either be cut by the bears, signaling daily downtrend into further weekly consolidation, or we were looking for the bulls to simply engulf and give themselves the daily uptrend again. Second scenario is what happened. We regained the daily uptrend today, now healthily above our short-term moving averages, right? And you have the daily MACD now crossing positive again. On the weekly, we were on the watch for the MACD cross. The MACD cross not able to happen, even though you did have slightly weak momentum here over the past 5, 6, 7 weeks, right? Not really able to break to new all-time highs. Most likely, maybe markets were waiting for this event pretty much to green light into further continuation, which is exactly what happened right now. So bulls full in control of the daily right now, full weekly trend control as well. Your weekly higher low is now set. Your new weekly higher low, 38,500, let's call it, confluence with the 12 EMA, and your bulls onto leg number 1, 2, 3 weekly legs higher right now. Monthly bulls, full control as well. No red flags here, guys. The only things that were displaying red flags leading into today's meeting was pretty much the SPY displaying a daily downtrend and QQQ displaying a daily downtrend. XLF never lost it. XLV never lost the lows. IWM Russell also was relatively good, wasn't a daily downtrend, but in the context of weekly uptrend, which is the same as the rest, right? And the Dow Jones also never really lost the lows. So in terms of the major red flags leading into this event, there really was no immediate cause for concern. That's what we were watching out for, right? Loss of the trend lines on SPY and QQQ would have been the most important events. That didn't happen. Those were the only things we were looking out for. Financials performing well, breaking out of this rising wedge. Healthcare, relatively good, still holding this support level. IWM Russell, still holding this overall area of previous resistance, which is now support. So now, guys, bulls in full control of every single major index. Once again, in terms of your yields, let's take a quick look at yields here, guys. So yields as well, kind of peaking out here. That higher for longer here, guys, especially in your 3.9% by the end of 2025 instead of 3.6, well, it's kind of going to hurt your long-term yields just because they'll stay around that 4% mark for higher for longer, which is a reason why I exited this, the TMF trade that I had as a whole, right? I was figuring, well, my scenario was January inflation numbers came in hotter than expected. So we're going to have higher for longer, maybe fewer rate cuts. Maybe they get pushed back a little bit more. So I really didn't see any urgency to be in that trade anymore, right? Well, even though I was slightly wrong on Jerome Powell's stance that he may have taken today, the end result was relatively the same, right? Rates are pretty much going to be higher for longer, and I still do not see any immediacy for this trade. So I am still overall bearish on the long term on yields, but I'm going to wait for this trade a little bit more here, guys. I do think that this can stay in the 4.5, 4.3, 4.5%, right? They're going to be right around the end of year target, which is about 4.6, right? They'll probably hover around there, even still for a few months, guys, until we really see a few reports of inflation coming from 3.1 really hardcore down into the 2s right here. I don't really believe that there's any immediate need to take a play on your yields through long-term bonds. So I still want to take this trade, but I may take it at a later part in this year, guys. We have a bit more data on the table. We're a bit closer to that first rate cut. That's when I really think you're going to see more movement in yields as a whole. Right? Now moving on to crypto, because crypto moved a heck of a lot here, guys, today, which, you know, obviously for those reasons, guys, excuse me, risk on asset. Give me a quick second. So crypto, pretty much a risk on asset at this point, right? So context was a daily downtrend leading into today. And you can see here, guys, really before the Fed meeting, I mean, Bitcoin started a little bit of a rally at 1 p.m., but you can see it wasn't able to break the daily highs prior to that. The most of the move here, guys, came after your 2 p.m. meeting from Powell. And look at the recovery on Bitcoin here today, guys. Bottom to top, pretty much 10%. Absolutely crazy day of recovery in crypto. And they pretty much they were pretty much showing the exact same signs that the indexes were showing, right? We had a daily downtrend on Bitcoin within the context of a beautiful weekly uptrend and a beautiful monthly uptrend. What does that remind you of? Well, it's exactly what SPY and QQQ were doing, right? Daily downtrend, however, in the context of an overall weekly uptrend and an overall monthly uptrend as well. Well, crypto pretty much tied to those same narratives, right? Daily downtrend. Now that we've engulfed the entire most recent selling leg, the bulls have a beautiful chance to reset the daily uptrend in 2 steps, or just engulf this move, set it higher here, and then run again. One thing's for sure, it was a decent little bit of consolidation. I personally did not add to the positions during that consolidation. I was waiting for today's data. Now that we have the data, guys, I'm pretty confident in saying that Bitcoin, with this little dip that we've had right here, look, it's the breakout retest trade, right? Where were we retesting? Well, we retested the areas of your previous all-time highs that I was pointing out, right? Roughly 60 to about 67,000, right? And look where this weekly candle came into. This is still my area, guys. So even if, for some reason, guys, if Bitcoin doesn't follow the rest of the markets in their bullishness, and we do get some continued drawdown right here, I maintain that this area is a very solid area, guys. Breakout, retest of the zone, and then run into 2024. You know, we have the halving event coming up in April, so that should be fairly bullish, but I'm very confident in crypto's ability to maintain these levels at this point. The daily is looking great for a turnaround, either from a dip from here, daily high or low, or break V-shape, daily high or low, and set. The result is the same. The bulls remain in full control. Weekly high or low, in my opinion, most likely set. Now we'll be looking on for a potential another leg weekly up here. So crypto looking good. If anything, guys, represents a decent little dip buying opportunity if we were to revisit this mid 60 range. Moving on to Ethereum, same principle on Ethereum, right? Daily downtrend, however, in the context of an overall weekly uptrend. So this daily downtrend, what were we looking for? We were looking for the weekly higher lows on both Bitcoin and Ethereum. Look where Ethereum came down, almost right to the 12 EMA, right? So a little bit of a tap and run after Powell here today. Beautiful weekly uptrend. Weekly higher low, most likely set at this point here, guys, $3,000. If we were to get a gift and crypto gives us a little bit more of a dip buying opportunity down here, 33, 3,200 maybe, I most likely will be going for it here, guys, because even if we get a little bit more consolidation in crypto, just looking for a healthy weekly higher low for further uptrend. Ethereum catalyst, guys, is going to be the Ethereum ETF that is currently in discussion with the SEC. And future upside price targets, guys, your next area of resistance is undoubtedly the all-time high at 4,700. Still extremely bullish on crypto. And now that Powell has basically given us the green light here, guys, I do still believe any dips are for buying. Now moving on to our big tech names here. So Apple performing nicely here, 178.67, up 1.5% on the day. Very healthy day. So Apple, we were looking out for today's data to be crucial, whether or not the bulls would protect this daily uptrend that they had as of yesterday, or give it all back and revisit the lows. Well, regained the daily uptrend and just maintaining that nicely. I will remind you now at this point, guys, we're getting close to the area on the weekly at this point, right? Which area, how far do we need to see this daily bounce going to potentially have the best shot at a weekly trend recapture as well? Well, we're getting close here, guys, right? We need to get about as high as about 183 to 185. As of now, on the weekly, the bounce is not as significant enough. About a 38.2% bounce, but on the daily, the bulls are in full control. So we will look for them to maintain this daily control, hopefully all the way to about 183, 185 would be your best case scenario. That being said, this most recent daily leg up, we may encounter a bit of resistance. Take a look here, here, here. That's overhead resistance, right? The 180 mark, previous resistance, right? Little bit of resistance at this 180. So if we do get rejected at 180, looking on the pullback, looking to set a daily higher low, anything above 170 at this point, daily higher low for further trend continuation. We're now back above our short-term 12 EMA, which is a good sign. So the bulls have started step number one. Still a little bit more work to determine whether or not we can recapture the weekly and start really grinding higher here on the monthly charts. But for the most part, Apple moving sideways. As I've pointed out this past chart in the past, Apple does that sometimes, guys, just moves up higher and then takes a little bit of time to consolidate into its newfound valuation, then just continues moving north. No red flags for the company whatsoever. So looking forward to continuously playing any dips on Apple, guys. If we get a little bit of a pullback here, going to be probably looking out 175, 174 for a little bit of short puts that I'm going to be looking to sell, continuously playing Apple. As long as we're below 180, guys, still very attracted to play Apple. Moving on to AMD, I actually did make a play on AMD in line with my trading strategy for the week. If AMD was going to dip below 182, we were looking for preferably anything under 170. I did take that trade. We'll take a look at that at the end of the video. AMD, not very favored here today, guys. AMD was down almost 3% on the day, but after Powell did recover to under 1%. So that was a great little dip buying opportunity. That being said, the context, daily downtrend right here. Where are we coming into? We're coming into that big area of resistance, right? This whole, support. This whole chop zone. There was a chop zone for about a month at that point for AMD. Very decent area of support here, guys. What we're looking out for, even if we had a daily downtrend, it was in the context of an overall weekly uptrend at this point. So any move lower on the weekly, we were looking for a weekly higher low, anything above 161, looking for the weekly higher low for a potential further leg higher at this point. Where were we looking out for the bottom? We were looking out for this line, the 12 EMA, which is right here, pretty much 175, tapped it, and now moving above it. And we were looking for this big area of congestion. So that's pretty much your 180 down to about 165 zone to be acting as a very decent area of support for the bulls. And it seems to be acting nicely. Now, what does AMD need to do to recapture the daily, guys? Well, we need to break 193.61 of the upside. Break 193.61, engulfing move, creates enough space for a daily higher low. Hopefully, we're able to get above this here, guys. Then use the upper bound of this previous resistance as newfound support, and then muster a new daily uptrend, and then you'll know your weekly low is set, and we're on for a potential another leg higher, where at that point we'll be trying to challenge your previous all-time highs. So AMD looking fairly good for a dip buying opportunity, guys, from your all-time highs. We are still down about 21%, looking very good, and we're currently in a big area of support. So if there's any area that I want to be buying in AMD for the short term, for short-term swing trades, or even long-term positions, it is definitely here, considering the fact that this semiconductor and tech trade is still going to be the hottest trade of the year. So keep that in mind. Moving on to Amazon now. Let me get a quick sip of coffee. All right, let's do Amazon here. So Amazon, potentially now, guys, as I was saying, right? Amazon struggling to break out to the all-time highs. At this point, now that Jerome Powell gave more confirmation and more confidence to this market that inflation was no longer a problem, I do believe now that a lot of your big tech names that were struggling to run before, I do believe they will start to run now at this point. So key level for Amazon, we are literally right there. It is the 178 level. This was a big level leading into 2020 and 2021. Company never really able to break above, close below, and start trending higher. At this point, they will. Amazon's free cash flow this year will be absolutely insane. And I'm even thinking, even though we're close to the all-time highs, I am thinking of doing some leap calls even at these levels. Gonna price them out tomorrow and see how they are. Very interested on Amazon for the follow through, right? Very nice tightening range of accumulation. The bulls really staying close to this resistance area, guys, really leads me to believe that the breakout is coming, right? Weekly beautiful uptrend at this point by Amazon. The monthly bulls are in full control right now, coiling up. And what I love to see, guys, is that we're really like, when we tap this resistance now for the past 4 weeks, did we get a significant sell-off? No, the bulls are staying close to the strike zone, right? In striking territory of this big resistance area. Once we clear this, guys, I think it's pretty much smooth sailing all the way up to 188. So roughly about $10 higher for Amazon right now. Looking extremely juicy for a breakout in this area. Going to be looking for the daily uptrend. That will be a break of 179.50. Break that, you get a new daily uptrend. You crack this big area, and that's when I believe Amazon is going to go on a little bit of a tear there for a couple of weeks and eclipse its all-time highs. In my opinion, that is coming within the next 2 to 3 weeks. So stay very in tune for that on Amazon. Amazon looking extremely bullish. Now moving on to Google. Google also looking very good, 1.19%. Google, look at Google's performance, guys, over the last like 2 weeks of trading, right? From 131 all the way up to Monday's highs, right? That's a 16% rally on Google. That's why I was saying I love playing Google down here. It's cheap, and the market's not going to let it trade cheap for that long, guys, because it is part of one of the hottest trades of the year. So a lot of these companies are not going to get left behind, guys, even despite Google's troubles with their AI software. Even Apple, despite their slow revenue growth, guys, they just will not get left behind in this market. They just have too much cash, and they're doing too many things in terms of AI, in terms of business productivity improvements to improve margins over the next couple of years. They will just not get left behind, guys, and Google is largely the same. So at this point, Google, very healthy daily uptrend. If we continue to consolidate for which reason tomorrow, it'll just be looking for a daily higher low, anything above 141, looking for the daily higher low for further trend continuation. But the way this trading is looking, especially after today here, guys, the bulls looking to recapture these shorter term timeframes, right? Regaining the hourly uptrend. Pretty sure that your new daily higher low is right here, 147. And now we may be looking on to another leg of daily moves higher. Your resistance is still set. Prior all-time highs around the $155 range. One thing's for sure, if Google hesitates in this area, comes back a little bit down, I will be playing Google fairly aggressively here in the high 140s. And Google is another name where I will be looking at leap call options, because I do believe the company is valued very cheap, arguably the cheapest of your big tech names. They still have very attractive growth for the next 3 years as well. So that will be one of the plays that I will be doing in terms of some leap call options over the next year here, guys. No red flags with the company. Weekly uptrend looking extremely good on the recapture as well. So any move down, guys, even if we fall off here, any move down, just looking for the weekly higher low for further trend continuation. Looking amazing. If we get a little bit of a gap fill, 144, maybe we get a little bit of a pullback in the market, just some, slight consolidation maybe on Google of all names. Well, this is the striking range for me. Now let's move on to Meta. Meta up 2%, and I do believe that now with Jerome Powell's green light, Meta will finally be able to start trending towards its all-time highs again, now breaking above 500. So we were looking at Meta's tightening range leading into today's event, and we were looking whether that breaks bearish or whether we get the bullish break of confirmation. Now we have the bullish break of confirmation. The bulls recapturing the daily uptrend, still within the context of an overall weekly uptrend. Of course, Meta has been in a beautiful weekly uptrend this entire time. So now that the bulls are in short-term control and long-term control, we will look to the higher levels at this point, looking for a break of 522 for the continuation of your beautiful weekly uptrend at this point. The only red flag that's been the case on Meta for the past 4, 5, 6 weeks at this point, ever since earnings essentially, has been a relatively high weekly RSI now at this point. Still no red flags, no signs of pullbacks, guys, until I see a confirmed daily downtrend on Meta, guys. Your bulls remain in full control. 12 EMA, the moving average still well above that right now. So next target, guys, looks like we're going to 522. No red flags. Moving on to Microsoft. Microsoft as well was one that we were kind of worried about whether or not they were going to be able to really get this breakout underway after today's meeting. Now that we have bullish confirmation from Powell, guys, your bullish break can continue by Microsoft. So this is a textbook trade. If it wasn't for today's meeting and the uncertainty around it, guys, I would have put almost 100% probability on Microsoft's ability to break out of this range, break out, retest it as support, and run. That's exactly what's happening right now. Daily uptrend is beautiful. Next target right now is going to be 427. Break of that, and you just continue the daily uptrend at this point. Microsoft on the weekly looking coiled up for a while there. Now looking for the new leg up on the weekly and on the monthly as well. Bulls never losing a minute of control. Looking extremely good here, guys, on Microsoft. Upside targets for Microsoft at this point, 450 for continuation. No red flags on this stock whatsoever. And your support area, guys, down here, obviously, if we don't get it done right away, well, the bulls have an extreme level of support down here, talking about this yellow line, 415, big area of support. And look, your moving averages are going to be there as well. Going to be tough for the bears to get through that one. Now let's move through move to Netflix. So Netflix as well, right? 1.12%. And now Netflix is clearly above its prior level of resistance that we're looking at, this supply zone, 620 roughly. At this point, guys, the next stop for Netflix is most likely going to be the all-time highs right around your $700 mark. Take a look at your daily. Daily did a great job of consolidating and protecting your 12 EMA, this moving average right here of the past 2 weeks, waiting for today's data. You could see the apprehension in Netflix, not willing to want to make a move, but now pretty sure that in the next few days, we will get continuation. Daily uptrend underway by the bulls, weekly uptrend as well. Never really in question, right? Beautiful weekly uptrend right now. Pretty confident in saying right now that your weekly higher low is set right down here, 594 at this point, right? So any move is just going to be for continuation of the weekly uptrend. And as I've said, guys, no red flags whatsoever on Netflix. I truly believe that this company will have no problem attaining its all-time high over the next month or two at this point. $700 is going to be the level. Personally, I like Netflix better in something with a 5 handle, 575, 550, but I just may not get it. The company's performing too well and the broad market is performing too well. So there's really no reason for this company to be selling off now, at least at this point, to the tune of about 15% without a general overall market correction. And the biggest catalyst for overall market correction passed today, and we just didn't get the confirmation here, guys, right? Moving on to NVIDIA. So NVIDIA doing well on the day, 1%, right? And we were looking at this tightening range on NVIDIA and how it was going to develop on the course of the day. Well, obviously, we've been saying, guys, that this is pretty much the hottest trade of the year. Semiconductors just continuing. And if the Federal Reserve wasn't going to slow the markets down, guys, there's not much else to slow NVIDIA down except from its own valuation right now, sitting about 2.5 trillion. The fundamentals, however, we covered this after their earnings. You know, you can pause the screen if you want. Fundamentals aren't even that bad whatsoever, guys. Even if I were to redo these PEG ratios right here, right, I can even do them on screen for you right now if you like. So let's take their 2024 EPS, right? Current share price of about $900. Let's call it 900 flat, right? $900 divided by your 2024 EPS, 2215, gives them a PE ratio forward of about 40.3, divided by their growth rate. Do I have the growth rate right here? I do not. Yes, I do. 33%. My bad. Divided by 33. PEG ratio 1.23. It's not very expensive, guys, right? If I bring up Google, I think I have Google's on the screen right now. Yeah, NVIDIA is actually cheaper than Google when we run a price to earnings growth multiple on it, guys, which is really putting everything on a common denominator, right? So NVIDIA is really not that expensive. So the only limitation to it is its own valuation at this point. Next target, in my opinion, guys, is going to be, we're going to break this 985, probably going up to $1,000, going to be the likely case. Bulls still in full control, never losing the 12 EMA right here. Beautiful tightening range. Where is the tightening range happening, guys? At the top end of a bullish move. Everything looking extremely good for this company, not even able to pull back, guys, for more than a week at a time. Just such a monster of a stock. So the company is doing so many beautiful things. And as I've said, guys, if you haven't taken a look at, I probably won't do one on the channel because it's not really the context of a channel, but if you're into technology and you're into AI, just watch a 10-minute recap video of the NVIDIA GTC conference going on this week. You'll probably find a number of creators doing them, and you'll probably love to hear what the company is doing. I mean, they're really revolutionizing the way that computing power is being used for different applications such as robotics, AI and different applications there. Really doing a fantastic job, guys, of pushing technology forward as a whole. So really thankful to have this company in the world for doing that. Such a solid company. On the technicals, guys, no red flags, protected the lows. If we get a break here of 921 over the course of the next few days, daily uptrend simply resumes, and we'll just watch out for all-time highs. Moving on to Tesla now at this point. So Tesla, little bit of recovery today, 2.53%, really getting a case of a rising tide lifts all shifts on Tesla, right? Because Tesla, the news for Tesla today wasn't particularly good. The Fed really reinforcing the fact that rates will be higher for longer at this point, reinforcing a terminal rate of 4%. Now you can argue maybe that's just, maybe window dressing. Maybe they're just saying that so people don't get overly bullish on the markets and start spending their money and cause a resurgence in inflation. It may be lower than that, but today there really wasn't any positive data for Tesla specifically, or stocks that are exposed to changes in interest rates, right? But rising tide lifts all ships, Tesla benefiting from that as well. So we'll give it to them, right? And now Tesla putting in a decent move from the lows here, right? So take in consideration here that we are in the context of a daily downtrend and we are coming into a big area of support. We know that 180 down to 170, these two yellow lines, big area of support. And that support extends all the way down to our last line here, 152. Never got down there. Confluence with the bottom end of your downtrending channel as well, which really put a stop to the price here at about the 163 level. And we've been pretty much rallying since that bottom right there. The bulls, however, not out of the woods just yet. Take a look at your daily bounce. The size of the bounce is fairly juicy right now, coming up to almost 80%. So it does set the bulls up nicely for whenever we do have consolidation to set a daily higher low, potentially get a little bit of a daily uptrend going. However, keep in mind that Tesla does have deliveries on Monday, the 1st of April. That being said, they are estimated to potentially come in a little bit light on deliveries over the course of this quarter. They may have a slight miss. And also keep in mind that Tesla over the last quarter has been doing a fair amount of price cuts. So what will we have in their earnings in roughly a month? Most likely lower than expected revenues because deliveries might miss, and lower than expected margins because of the fact that they've been doing so many price cuts, right? So may not be a very tremendous quarter for Tesla. So any upside that we could get could be fairly limited if their deliveries are soft, right? And if margins took a hit, which are likely case scenarios at this point. I really want to see this earnings, or at least see deliveries, guys, before taking any positions down here at the lows on Tesla. Because as I've been saying, guys, Tesla is currently in the bottoming out process. It's a very cyclical company. They're very sensitive to interest rates. That being said, eventually the stock will bottom. However, I think that process is going to happen over the next 3 months. Whether it's going to be right now, the last week, whether it's going to be right around earnings or after earnings, or whether it happens in May and June with the rest of your interest rate cyclical stocks, that truly, guys, nobody knows. All I can tell you right now, at its current valuation, 175, it's not that bad. The problem is that their growth is slowing, and if that slow growth lasts into 2025, then the valuation is going to get more expensive, even though the stock price has come down significantly. I mean, you just have to look at what earnings, right? The stock price is a reflection of how much earnings the company can generate. And here's your EPS. As you can see, we're expecting lower for Q1, relatively flat Q2 relative to Q4. Q3 and Q4, not much better as a whole. Take a look at your annual EPS expansion rate. You remember that article that I showed you last week? Tesla's a growth company with no growth. Well, they're right for a better part of 2024. It just remains to be seen. Can they recapture that? What is going to be the guidance for the end of the year? And how do they see 2025? Those are the main questions for Tesla, which is why I say Tesla most likely will bottom here in the next 3-4 months. When exactly is that? That is a great question, guys. Nobody truly knows the answer here. This trade is still an unfavorable trade. That being said, I will potentially be interested in taking Tesla as close as possible to 150 because I personally evaluate, as of currently, their car business alone is worth roughly $140 a share. So that is where I'm willing to take this trade because I believe it to be closer to my fair value. So we just need to we need to see here, guys, if we do get that daily uptrend shift, will it last through deliveries and will it also last through our earnings? We'll take it one day at a time on Tesla. One thing's for sure, as I've said, guys, weekly downtrend still in that until we reverse this into a daily uptrend, guys. Your bears still in full short-term control, daily downtrend, weekly downtrend, monthly downtrend, and also earnings, unfortunate downtrend here, guys. So that is pretty much the analysis for Tesla. Moving on to Palantir here. Palantir having a nice day, 3.24% on the day. And as I was saying yesterday, Palantir represented a very nice dip buying opportunity down here to be writing some puts right around the $22 range. I didn't get the opportunity myself, but congratulations to anybody that did actually take the trade yesterday. Palantir starting to recover a little bit nicely here. So we had a daily engulfing move and loss of the daily uptrend. They actually cut the lows here, 23.44, by a couple dollars here, or a few, couple of cents, tens of cents, right, yesterday. Now that the daily bulls are trying to make a little bit of a resurgence, we need to see the size of this bounce, right? The size of this pullback alone leads us to believe that the best case scenario for the bulls is going to be lower high into a tightening range. Now, the worst case scenario is lower high, lower low, daily downtrend into further weekly consolidation, right? One thing is for sure, just need to measure the size of the bounce. So far, the bounce is not significant enough that we can guarantee the bulls' ability to recover, only 38.2%. But if the bounce gets as high as 25, 21, or better, even as high as about 26, then you really get a good chance at the bulls being able to recapture the daily uptrend. Your weekly higher lows will be set, and we'll be looking for another little leg higher here, potentially trying to challenge this $28 of resistance. Palantir looking very good. One thing's for sure, if we do revisit these lower bounds right here, coming down to the $23 range, I'm very interested playing the 22s and 21s in terms of short puts for the next coming weeks. That being said, Palantir looking quite good. Now, lastly, PayPal. PayPal also looking quite good. And PayPal, I've been saying, guys, for the past, week at this point, right? I love this stock, and I was pretty sure that when we broke this downtrending channel line right here, in the context of a daily uptrend, in the context of an expanding weekly uptrend as well, as you can see right here too, right? Pretty sure that while we got all those three things at the same time, the next stop for PayPal is going to be 75. It's not there yet, but it's really starting well here, guys. Daily uptrend is confirmed. We have a new daily higher low right now set pretty much. 62.53 is going to be your new daily higher low. Daily uptrend continues at this point. We are now finally above this 200-day daily moving average. This green line right here. When's the last time we were above this moving average, right? For a significant amount of time? Well, you'd have to go back to 2021, 3.5 years ago, pretty much at this point here, guys. So looking fairly good on PayPal, guys. I will be expecting further continuation now that Powell has pretty much green lighted this. So looking good. Valuation is still relatively cheap on the stock. One thing's for sure, if we do get a little bit of a pullback, I will be aggressively playing PayPal rather in as close as possible to $60, right? Previous resistance, previous decent little area of support right here. So this, between these two yellow lines right here, guys, $62 to $60 on any pullback, I'll be aggressively playing PayPal, because now the longer term trends are looking in our favor. And I do really think we are going to get price expansion here into the $75 range as the bull market broadens out and starts encompassing a lot of these stocks that got left behind. So hopefully you guys enjoyed all of that analysis. Now let's take a quick look into my portfolio to see what I did after Jerome Powell's meeting. All right, guys, take a look at the portfolio here. So you can see that really not much had changed over the course of this past week. However, today we did have a nice little bump in appreciation on the account. We were relatively flat leading into today. I had a very small short in terms of the NASDAQ futures, right, that I had on. That pretty much got stopped out today. And we're going to go through a few of the trades here, guys, but still some decent performance year to date here. Back up to about 7.85%, still trailing behind the S&P 500 and the QQQs ever so slightly. But now that we are green lighted, we are pretty much back to full on. The account has full buying power, and I'm really looking forward to be playing this market a bit more aggressively after having really, tapering back here, getting ready, trying to prepare for a bit of a worst case scenario event. Really didn't want to sacrifice any account gains whatsoever. We did a great job protecting the account. And now that we are through one of our largest events of the year, now we can just go back to trading as normal. So take a look at the positions here. Number one, just want to show you guys that I did indeed close the short trade here today. So here you can see the first edition of this short was put on the 14th of March, so roughly a week ago at this point, where we shorted the market from 18,198. If I just pull that up on the futures chart here, guys, you can see that pretty much we were shorting pretty much right around this level right here. Okay, so that's pretty much where we took the short trade, and we were stopped out earlier pretty much on in the week here, because we always set, when we're start running into profit on a short here, we always want to set the stop loss to break even Prior to that, my stop loss was actually at the top end of the range right here. So we were willing to sacrifice about 500 points. But when the trade started moving in our favor, guys, put the stop loss to break even, right? Just don't want to lose any money if we don't have to. So that's why we pretty much opened the short trade right here. And you can see we pretty much got stopped for break even when the market did come back, about 5 days later at that point. And then yesterday I had a decision to make. Do I throw the short back on or do I just leave the account as is? I chose to throw the short back on, roughly around the same level here, right? Still within this relative range down here, right? And when I chose to short the market yesterday, we were pretty much right around, I would say these levels right here, guys. Pretty much in the afternoon, we chose to go short and I set my stop loss above Monday's high. So that was a very key thing that I was looking out for here, guys. Monday's high, because at that point, it's the high of the week. And if we do start regaining that level, guys, the bulls start taking back too much of this move and we really start getting underwater fast. So I really capped the loss here. And you can see we did get a pretty much automatic stop loss trigger when we crossed that level after Jerome Powell here. Pretty much we closed the trade here and you can see this is the loss on the short here. So we bought it back, lost about 164 points on this trade. It's not quite 2 to 1 dollars to points, guys, but it's close. We took about a $300 loss on the position here. You can see the value of the position right here. So we 36,460. And then we closed a bit higher here. So about a $318 loss on the short. Not a very big loss, but it was a loss that I was willing to take waiting for the data, right? So I basically paid to figure out whether or not my thesis was right or wrong. And I'm very happy with the result here, guys, even if we did lose a little bit of money. Now, in terms of the position, so a few of them that I was running into the day with, well, one of them was the short. We'll cover the Apple calls in a little bit here. But what I do want to cover is Pinduoduo. So we made a very beautiful trade here on Pinduoduo after having done some analysis for one of our subscribers here in the past coming weeks on Pinduoduo. Really like the company's valuation leading into today's earnings. If you don't know what the company does, they're a competitor to Alibaba and sell products for even cheaper than Alibaba, if you can believe it. So in this current environment, when consumers not only in China, but also in the USA brand exposure that Pinduoduo has is a brand called Temu. Very hot viral brand on social media right now. Very cheap prices. And as a whole, I was expecting very easy thesis here, guys. Consumer discretionary has been relatively weak. People want cheaper items if they can find them. And the company does have, in the context of international shipping, not too bad international shipping either. And their Temu brand has really been expanding nicely here. Their valuation was relatively good, so I was expecting them to have a fairly good quarter of earnings. As you can see, the past 4 quarters for them has been a story of outperformance. They've really been beating across the board. Take a look at these earnings beat right here. Past earnings beat, 30% EPS, 20% revenue, right? This one as well, 40% EPS, 20% revenue. Just coming in largely over the expectations. Consumer discretionary trade, right? So at this point, I was expecting the trade to be good. So in a rare instance where I love the company for the valuation, I love the potential upside, and this is in line with your China plays that are beaten down a little bit, I went fairly aggressive for it. So the stock yesterday prior to the earnings was about 128. Now, I wrote the fairly aggressive 122s. The expected move, guys, was down to about 118. So I wrote above the expected move, but I did stagger it a little bit, wrote some of the 110s all the way down at the lower end here, which would have been your weekly higher low, prior resistance, which would have been around that support area, right? Let's call it 110. So bit of a greedy trade for me. I was confident in it. Wouldn't have mind being assigned. My average cost, if assigned between these two positions, would have put me right around the 115, 114 range with all premium collected. Look at these 122 puts. I got $5 for them. Very, very decent amount, right? And then the 110s, we got $1.23. So over a 1% rule. And this one right here was really a very beautiful trade. We closed them early on the morning as soon as Pinduoduo pretty much opened, right? Cascading to the downside, giving back a lot of the earnings gains, but the earnings were fantastic for the company. Just the market, selling off a majority of the gains. So we closed the trade early on in the morning here, pretty much before 10 o'clock. You can see the timestamps right here, right? 9:55, 9:56. Just made a decision, guys. I'm up nicely. Wanted to take my gains and get ready for Jerome Powell. So you can see we closed those $5 contracts right here. We closed them for 41 cents, over 90% profit. And this one as well, the 110s for $1.23. We closed them at 8 cents, pretty much 90% profit as well there. So very, very decent trades on Pinduoduo as a whole. About $571 of profit across those two trades, which, largely offsets the slight loss that I had to take on my NASDAQ short. Couple that with the positions that I opened after Jerome Powell. So all of these positions mostly were opened after Jerome Powell. Number one, going to cover these quickly. Apple, we rolled up and out. So prior to today, I had the Apple for this Friday, 177.50s. After Jerome Powell speak, actually, while he was still talking and I understood the tone of what we were going for here, well, I rolled up one strike to the 180s and out a little bit. The total cost of that trade was about $36 or 36 cents as a whole. What that allowed me to do, guys, is after being assigned on Apple, my average costs are right here. So I was assigned on Apple at 180. We got $1.03 for those 180 puts, and we got 66 cents for the covered calls at 177 leading into this week. With the roll as a whole, our total net premium credit here, our average cost is sitting about 178.67. So I really want to be called away potentially at 180 or even better. If we trade around the 180 mark next week, I may even roll the calls out, but at least we're pocketing some money here. I did spend a little bit of money rolling up to the 180s, but it's a no-brainer play in my opinion, guys. I'm spending $36 but to potentially gain the difference between these two strikes, $250. So spending $36 to increase, my potential profit here by roughly $250, all things considered. So was a fairly decent trade as a whole. I'm happy with the result. As I said, if Apple continues trending higher here, I will be most likely rolling those calls, trying to juice as much as possible out of this position, right? And I also threw another contract at Apple, which should also be featured here roughly as well. Yeah, the 175. So towards the end of the day, I saw an opportunity for the 175s. At that point, Apple was trading roughly 177.50, 60-ish, I want to say. I went with the Apple trades because I would not mind having even more exposure on Apple down here at the 175 area. So you can see we took those guys for roughly 27 cents here. On a weekly basis. That's fairly good here, guys. Only 2 days remaining of trading. So pretty much, if you divide this by 2, let's call it about 14 cents. 14 cents times 5 days is about 60 cents. 60 cents, not quite 0.5%, but I was fairly happy with this, guys, in terms of the Apple play. Now, we can also get logged out. That would be perfectly fine, too. Give me a quick second here. So guys, running through the rest of the list of trades here, we did the Micron plays for earnings, semiconductor play, fairly obvious play here. Micron recovery story, they really posted bad earnings a few quarters ago and have since been trying to turn things around in terms of generating positive EPS, and they really crushed it on today's quarter, guys. I'm pretty happy about that. But with the demand for semiconductors that we've been seeing from all our other company reports we go over, why we go over so many company earnings, guys. I was figuring that these guys as well would have heavy demand for their product, which was the case in the after hours, guys. This company trading, well, you don't see it right now. Let me turn on the after hours trading right here. Sorry about that. So you can see after hours, guys, trading about 113 up very, very nicely after hours, about 20%, right? So these are going to be ending worthless. So we got about 35 cents for 2 contracts here. So I'll be pocketing that, pretty much ending. Those contracts will be worthless tomorrow morning. Now, more trades that we have. We took the AMDs. As I was saying, guys, I love AMD in the mid 165 range. So we took those as well. 167.5 puts for about 59 cents in the midpoint of the afternoon when Jerome Powell was talking. And as you can see, guys, they're down to about 19 cents. So this one most likely will end up in our pocket as well. Very decent trade there too. I usually don't show these percentage changes because they lead to confusion. But on short puts, obviously negative means that you're actually winning. So just don't mind that column right there. That's why AMD, you can see I'm down 34%, but it's not actually, I'm actually up money. You can see the unrealized P&L here. Now moving on to Alibaba. Alibaba still in this $77 call position. We will see what happens. Probably will close it tomorrow here, guys. My average cost on Alibaba with those covered calls this week, average cost down to 76.83. So looking forward to a rally by them. This will probably be my last time writing covered calls so close. Now that we have confirmation from Powell, really looking for the daily uptrend, looking to take us up into this $80 range. Going to try to milk the most out of this position as possible. Now, we also took another earnings play, guys. Chewy, we did the 14.5s and the $15 puts. You can see I got over 1% for these. The average price right here on the 14.5s is about 13 cents, close to 1%, and then 20 cents. We got over 1% rule for those. Chewy looking decent, guys. I really look curious to look into their earnings. Haven't had a time to so far. But this company, guys, I mean, their market cap's only about $8 billion right here. It's an $8 billion market cap, and they bring in $10 billion of revenue, and they've now since turned to be a profitable company in the last roughly 4 or 5 quarters at this point. So looking to see whether they're going to have a little bit of a turnaround story. Could be an interesting play, but I want to take a look at their earnings first. As a whole, guys, I wasn't opposed to taking 200 shares down here, which would have been the all-time lows if assigned. So that's why I took that fairly, not very a risky play for me. It was, 1.5 times the expected move. The expected move was roughly 10%. So my trade would have put them a little bit lower. You can see here, they ended the day up about 6%. So coming down to the 15s, $15 range, that would have put us roughly, let's call it about 15% off current price. And then the 14.5s would have been pretty much 18%. So not quite 2 times the expected move, but I did give myself a fairly decent margin of error there. So quite happy with that trade. That trade should be worthless tomorrow as well, since Chewy in the after hours, well, they popped and dropped, but still well above 14.5 and 15. Now moving on to the next trade, Google 147s played aggressively on Google as well after Powell was done speaking. Google was trading at 148 at that point, and I was like, you know what, let's just go for this one as well, because I don't mind Google at these current levels too. So we got about Google, we got about 34 cents on those. They're down to about 27, so we'll see how those goes with not being assigned, but pretty confident that these will probably end worthless on Friday unless the market really has a severe turnaround. Next, we took the Intel. Intel was featured in my Friday's video, so we were looking for the $40 strike range. We got the 41s for about 21 cents, and that's pretty good considering the fact there's only 2 remaining days of trading, and I was able to get 0.5% on Intel 41s. The trade for Intel, as I explained in Sunday night's video, was pretty much we're looking for this area right here. The expected move was 41.04. So we went with the expected move, and it's also a nice little area that's been proving to be support for the considerable past amount of time. The weekly moving averages are right there as well, so it was looking good. The actual bigger area of support is down here around $38, but I'm fairly confident, guys, that the 41 would be able to hold, semiconductor play. And also part of the technology narrative as well. So I figured that they would at least be able to defend this short-term area over the course of the week after Jerome Powell pretty much green-lighted the market. That's why I went with that one, guys. Wouldn't mind being assigned at 41. It's only one contract anyways, not that big of a deal. And then we have some Nike covered calls leading into earnings, right? Nike 106s, we got about $1.77 for those. So my play on Nike is pretty much just waiting for earnings on Thursday at this point. We'll see what happens. One of 2 things is going to happen. If we end over 106, then I will most likely have to potentially roll some calls, try to generate more premium, because my average cost is up at 110. Now, I don't think that Nike is going to put in a 10% move after earnings. A lot of their business is in China, and what we've been hearing from China is that the consumer is not very strong, but even in the US, guys, the consumer is just not that strong. So I'm not expecting the best results from Nike. We could have an X factor in the fact that it is the Olympics right now, and I know they're a big sponsor of a lot of sports teams and whatnot, and it does generate significant marketing dollars for them. But whether or not that's going to be realized in the past quarter, I don't think so. Most likely in the next quarter for some of your Olympics merchandise and stuff like that, right? So if Nike goes up to 10% higher, I would be very surprised, guys. If it does, well, I'll be out of the trade and I'll try to get as much of my money back as possible. We'd probably be ending the trade at a loss. But if it goes to the downside, guys, well, my next average in on Nike, guys, is going to be around the $90 mark. So if for some reason we drop, I'll be looking to make an average down put play here around $90, $89, which would pretty much cut my average. If I do get a sign down there, my average cost now becomes right around the $100 mark. And I believe that's an easier area for Nike to recapture in the short term. So that's how I'm kind of looking at the Nike position leading into the week. So hopefully that was helpful, guys. I also threw on a couple little bit of swing trades. Let me just turn this off because it puts too many positions here. So if you take a look at my little swing trade positions that I put back on, Meli, Mercado Libre, right, took 2 shares back on, relatively close to where I bought them in the first place. First place, I bought them for $15.25, sold them for about $15.65 before last week when I sold all my positions, essentially. Got them back for pretty much the same price, $5 higher. That's fine. Still the same trade here, guys. Beautiful, beautiful, beautiful breakout retest trade by Mercado Libre. Look at this gorgeous monthly uptrend right here, right? Gorgeous monthly uptrend. Tapping the bottom end, trying to bottom out on the weekly. You can see the best on the daily here, really trying to change the daily trend. So hopefully we can get it going. Fundamentals are beautiful for the company. Going to give them a chance. And we also have our SPGI shares back as well. SPGI, the chart looking eerily similar to Mercado Libre, right? Beautiful, beautiful monthly uptrend right now. Looking breakout, right? retest of this previous range right here, not able to dip below, and the daily trend really looks like it wants to turn the corner right about now. So that's why we're taking that little swing trade on PGI. Such a solid company, nothing bad to say. So those are all the positions that we have back on, guys, really respecting the guidance that I gave you guys essentially, right? I said if we were wrong on our short-term bearish thesis, well, we just close the trade and it's business back to usual. We'll just keep trading the wheel strategy, right? Full buying power. And now you see, guys, deploying the buying power right away when we get confirmation of the data. That's just what we do, just back to the basics in terms of the strategy, guys. So hopefully all of that was helpful for you. And if you did find it helpful, consider dropping a like on the video. Would really appreciate it. Consider subscribing to the channel if you're new. So close to 1,000 subscribers, guys. You all have made me extremely happy embarking on this journey through YouTube. And I hope for this to be a journey that is going to last for many, many, many years into the future. So looking forward to spending that time with you guys as well. And as usual, if you have any questions whatsoever, guys, please feel free to leave them down below in the comment section. I'll get back to you within the first 24 hours. Anything you want, technical analysis, specific stock you want me to look at, options play, anything you want, leave it down below in the comments and I'll be happy to answer. So take care, guys. Peace. I'll see you tomorrow after the close.